Hello. Today I'm going to talk about a very unique problem that I run into all the time. It seems like no matter when I get into the market, it always goes the exact opposite direction of what I want. So if I get in down here at the low, invariably it's going to go lower. If I try to open up a short position, for example, up here, the market is going to go higher. So I decided to try something entirely different, something that only Jackrabbit could pull off. Instead of buying low and selling high, I'm going to buy high on a long position. I'm not shorting the market. This is a long open position. And I'm expecting the market to go higher. This may seem like an impossibility and actual witchery, but it's really not. Jackrabbit makes this possible through some very interesting mathematics. The science behind this really is fascinating, and that is what we are going to get into today. So without any further ado, let's unveil this miracle strategy that can make money buying high. So here it is, completely unveiled. And you can see that it's made 3 trades within the last 14 days with an average of 1% profit. Not bad, pretty reasonable considering. And this is using a simple take profit. If I want to really step up the results, I can turn this to a strategy. And you can see it gets a little better. One trade at roughly 1.6% profit. Bitcoin has had a difficult season lately, and I'm going to demonstrate other coins that get 9 or 12% profit using this very same technique. But for now, let's just stay with the simple process and really dive into what makes this insanity work. Let's start with the RSI. Now, I've demonstrated this technique below where I am using a 4-hour RSI as momentum. And for the context of this particular recipe, momentum and trend are not the same. I am looking for the market's change of direction in a positive way. That is a positive momentum. I'm not looking for long-term trend. For example, you see here's the buy signal, and you see the market is going upwards, upward momentum. Now this is too short to technically be called a trend. So using RSI as momentum, where anything above 50 is an upward trend, anything below 50 is a downward trend, is an interesting way of looking at it. Now I said trend there, but it's really not. It's in the momentum of the direction of the market. So an upward momentum that can change any time. A downward momentum that it can equally change. Get my mouse pointer back. Anytime. So momentum is simply the short-term look at the direction of the market. And that is what I want out of this combination. Short-term look at the market. but I want this short-term look to be done at the 4-hour market. Now, the 4-hour market is very trend specific. So it's kind of a gray area in terms of trend versus momentum. But specifically for the intent that I'm looking at, it is strictly momentum. All I need is 2 or 3 candles to go upward to have a positive momentum. But that short range of time is not a trend. So this RSI approach really is very simple in that regard. And it's very unique and simply does well. So as you can see, the time frame is 240 or the 4-hour mark. I'm using the closing price with simple moving average. Now the simple moving average on both the RSI and the smoothing is what produces the chart you see. I'm also using a length of 200. Now the common length of 200 is what most traders use for long-term trend analysis. But again, this is not long-term trend. So it should be considered long-term momentum. The pulse of the market versus its direction. Now you can see the 50-50 split between overbought and oversold. And you see that I am using the crossover method to pick my RSI signals. Very simple, very easy, and incredibly effective. So this is just one layer of momentum. I am actually using 3 different layers of momentum in this approach. So let's get to the other approaches. I'm going to zoom this in, and I'm going to disable the noise. Let's look at each indicator one by one. Okay, so now here I have a dual channel momentum. Anytime the price goes above the momentum, it's a buy signal. So you can see all of these buy signals right here. So I only want to purchase when the 1-minute chart shows price is increasing as a general level. Now again, I'm using a simple moving average to pinpoint this direction. So as the direction of the market increases, as its momentum is positive, that is when I want to make my purchases. So let's look at this approach. Now you see that I'm using high and low as my separators for my sources, and I'm using the simple moving average to control the duration. Now I'm also using a 200 period length, and I'm inverting the signals, meaning I want purchases above the line and sells below the line. And that produces this chart. Now the final component to the actual recipe is none other than support and resistance. Short-term support and resistance also running on the length of 200 is how I get my entry signals. And as you can see, my entry signals are actually on the resistance. I'm buying as the price goes up. I'm doing the exact opposite of what you're told to do in the market on a regular basis. You're always told to buy at the support level. I'm not. I'm selling at the support level and I'm buying at the resistance level. So again, this is a momentum technique. I'm looking for the market to go up and increase. And that process is what leads to the profits. So let's look at those profits after we look at the settings. Now again, long direction. I want the long approach for this. I am buying long. Now I'm using high-low too. So I'm taking the high price, the low price of the candle, and I'm getting the average. And that is what I am building my support and resistance on. Now my look back history is 321 candles. A bit of a weird number, but for this recipe it works brilliantly. Now in order to make sure everything lines up properly with the RSI indicator, I am letting the signal carry for 10 candles. This is important because normally RSI won't match support and resistance. So I'm creating that boundary to make sure I have that matching point. And you see that I'm inverting my signals. That is, instead of buying at support, I want to buy at resistance. Instead of buying when the price is going down, I want to buy when the price is going up. I want to do the exact opposite of what you're supposed to do. I want to capitalize on real-world market inversion. Inversion, of course, being the opposite of what you expect. So that is really the key point that we need to focus on. We want this market to do exactly opposite of everything you've ever been told. When you sell, you actually want to buy. When you buy, you actually want to sell. And that will produce the following profits. Now let's zoom this in and let's see it. So we literally get in at the bottom of this upward cycle. And we sell at a good portion of the top with the 1% profit. Nice and simple. It works because the market is moving in an upward direction. The market has upward momentum. And on a 4-hour chart, the RSI is showing both upward momentum and upward trend. This is really the secret. It's not witchery like it appears in the beginning, but actual science of capitalizing on an existing direction within the market. And the side effect of this science is, ironically, extremely low accumulation. In fact, you can actually set this recipe with a holding of only one position and make it a one-hit wonder. It does that well, responsively, in a wide range of market conditions. So let's start by looking at the 1 billion market cap coins. Now I'm going to hide the rest of it for now because I want you to focus on the profits for a simple take profit. So we're looking at Bitcoin, as I said, 14 days, 3 completed trade cycles. And as we progress through these various coins, it should be noted that this can be used for accumulation as well. So here we have 4 completed trade cycles. Now all of these are within the 14 to 15 day range, so I'm not going to really zoom around the chart too much. But you can see this is a maximum 2 positions. So very low accumulation when you have no limits whatsoever. Now, it's not a fast process in the context of generating a lot of trades per time frame. So it makes a good aggregation approach where you could have 20 or 30 coins and only trade 5 of them at one time and capitalize on market volatility to get the best level of coins. Now, because it is a dollar cost averaging approach, there is no stop loss. So there's automatically an added risk of holding the position. But as you can see, by the fact that the position sizes are so low, that risk can be negated by your entry position. So this is a small account approach that can work well in growing the account by limiting its exposure. And you can see that not every coin is going to generate the same number of signals. This is an opportunistic approach. We see a lot of coins have generated signals starting at the 11 a.m. mark of the time frame on the chart. But a lot of coins don't, like Ethereum. So let's try to find its last signal. Okay, here it is. Buying high, selling higher. And it made its 1% profit target. Sometimes the market is just not easy to figure out. And sometimes, no matter what you do, the market is just going to go opposite just because it can. So here we have an approach that will go opposite to the opposite of the market. That is, it follows the momentum of the market by taking advantage of other traders. See, when a trader would more likely want to get in the market, this approach is looking to get out of the market. So it specifically targets the supply and demand chain, looking for opportunities to get rid of its position in a profit. When traders want to get out of a position, it's actually looking to get into the position. So again, it's capitalizing on that market movement. It's capitalizing on the retail investor following standard practice. Buy low, sell high. It's capitalizing on investors' fears and greeds by wanting to get out of the market. And it's doing so in the perfect approach. And it's able to come out of the market with some very good results on a lot of coins. Now, not every coin performs that great. Some coins just don't do very well. They have slower markets altogether. Some coins are surprising. They just really hit it out of the park, go to town, and they're done. Here's a coin that took 2 positions. Let's see if we can find out where that trade cycle took place that took two positions. So that meant it bought high, but then afterwards it bought high lower. Okay. So both of these positions show 1-to-1. That's interesting. Here we go. Okay, it buys high right here. It buys at the peak of the entire chain. Then we get a process where almost hits its profit target. Then the market starts going down again. And the market really goes down. Panic sets in and the price just bottoms out. More panic, more market deluge. Market goes up. And lo and behold, we buy. We buy at the height of this market cycle. And then it goes up a little more. It goes against us. But then we are rewarded with the profit. But only two positions of accumulation. And this is on the 1 minute chart where absolute chaos and bedlam exist regularly. And yet we are making money buying the highs of the market. We are doing exact opposites of everything you should do in the market. And Jackrabbit is coming out smelling like a rose. Now let's keep going. TRX, what do you know? Even it pulls off a profit. And of course it has some accumulation, but only two positions again. And here, this is an interesting one. It has an opportunity, it makes its target, it gets out. And this market took a huge run. But there's no way of knowing how high it would have gone. So it doesn't care, it just gets out. But that's still the whole point. It bought at the height of the market that it was in, and then it waited for the market to go higher. And it did. Here's another coin that can be tedious to work with, and it still had two completed trade cycles. Now it has the most accumulation of every coin we've seen thus far. An average of 2 positions with a maximum of 3 total. And it's currently in a trade cycle. Okay, there's the first position, second, look at this market mayhem. A near miss. Okay, the last run is 3 positions. 3 positions. That's it. $30. And you can set this at a one-hit wonder and only use 1 position if you want by just setting your hold level. So it's very flexible. Here's one. In and out 1 position. Here's another one. In and out 1 position. So overall, you have an incredibly good market. Trading the opposite of everybody else with Jackrabbit is a money-making machine. I'm not going to try to think about what would happen without Jackrabbit, because that would be a mess. But with Jackrabbit, this is money. 3 positions, 1 position each, quite nice. XRP, 2 positions, 1%. It has higher than normal accumulation, but still 3 positions. That is really very nice. Tezos, 6 positions, and they're one-hit wonders. This coin is going to town. Let's actually go look at some of these trades. See how much drawdown they actually took. Well, that's not bad, and it did well with room to spare. Here's another one that did well, and a third one that did well, and a fourth and fifth both did exceptionally well. So 3 different momentum strategies working together to do the exact opposite of what you should be doing. Now these are all the coins above 1 billion market cap. What happens if you go to lower quality coins? Coins that just aren't that great to begin with. Well, let's find out. Let's go to KuCoin and let's actually see. Okay, here's unveil. Well, it does well. Let's see just how well it can do in extremes. An average profit of 9% on the 1-minute chart. Now, not every coin is going to bring in that kind of profit, but if you're looking for long-term success in a short-term time frame, backwards trading is really the way to go. Capitalize on when people want out of the market, and that gives you the perfect entry point. Let's look at a few more. Okay, this one has not made any sell-offs at all for strategy, but I'll bet if we go to take profit, it will. So if you want the big ones, you can add the big ones. If you want the little ones, you can add the little ones. 2.6% profit, 1 trade cycle. So it's easy to see which coins are long-term success and short-term success. Here's one. Higher than normal accumulation, which you would expect, but an average of 5% per trade. 4.3% actual per trade. That is good. Of course, the risks of that are a different story. So let's see what would happen if you went with minimum risks. Well, you would get 5 trades, and you would still get 1% profit. So as you can see, you could actually have your cake and eat it too, with the right mentality for your recipe. And the trade cycles here look very short, even for a coin that really isn't that great. Okay, let's go back to strategy. It's easy to see which coins you should stay out of altogether. Right here tells you not to trade this coin. Here is an average of 6% profit, 2 trade cycles. It does have accumulation, and that's what it's supposed to have. Okay, another coin you should stay out of. This one did an average of 5% on 1 trade cycle. %5 on 2 trade cycles. Let's see if we can find an interesting one. Something really worth looking at. Okay, this one definitely shows up. Anchor. 13% profit. Now it only has 1 trade cycle, but 13% profit for a maximum of 4 positions per cycle, 2 positions per cycle. That's strange. Maximum is 2, but the average is 4. So that must be for this current cycle. But still. Nope. Okay, so this one is interesting. Here we go. Look at that profit. Look how far that price action is above the take profit boundary. A little bit of accumulation. And even without the accumulation, it could have made profit early on anytime it wanted. So here we go. A low market cap coin pulling in outstanding profits on the 1 minute time frame. Now I do want to go through and talk about the risks. And yes, there are a lot of risks with this kind of a process. It's very easy to forget that when you're looking at 9 and 10% profits, that you do have the risk of holding. You do have that risk that the accumulation can become problematic. That's why I only recommend it on the best quality coins. Coins above 1 billion market cap. But this demonstrates realistically just how much goes into filtering out the wrong entry points. And you can see that even if you take on the most risk, sell by strategy, the results prove appropriate for the right coin choice. %19 profit. Okay, let's take this let's go to the method I would commonly use. I commonly just prefer a flat take profit, get in, get out. Now, obviously, I'm not going to get anywhere near 19% profit, but I'm happy with 3%. 3% profit for the level of exposure I have in this market is acceptable, even on assets that don't have a good market. A simple take profit can prove very good. This coin had no trades whatsoever, but yet with a simple take profit, it's now profitable. 3 completed trade cycles. 4 completed trade cycles. So you have a way of managing risk. You have a way of getting more reward if you want to take on the risk. And you do so by looking at when buyers and sellers interact with the market. Now, I would put this link in the description of the video, and hopefully this gives you an idea that sometimes the best ways of trading isn't always what the experts say. Remember that the experts are in business to make money, and part of the way that they make money is by manipulating trader psychology. So if you follow expert advice of buy low and sell high, you're following the trader psychology they want. You're setting yourself up to play into their hands. If you do the opposite of what they want with a proper approach, understanding your risks and your budget, you're actually using the same kind of technique they are. You're playing their game on their level because you're looking at the market the way they look at the market. Momentum is a powerful tool. Momentum in 3 different directions is a winner. Help me grow this channel. Like, subscribe, leave a comment. Let me know what you think of this approach. Have you ever traded against the market? Have you ever bought when you were supposed to sell or sold when you were supposed to buy? Let me know. Until next time.